Hello, how are y'all doing?
Good morning. How are you?
I'm doing much better, thank you. Let me write down some words. All right. I missed y'all. Okay, don't forget webcams on. And I have a new rule too. So webcams on, which was been the rule to begin with. Hi, everyone. And unfortunately, I got two new rules. One is you can be sitting on your bed, but don't be lying down in bed. And the other is you must have a shirt on. Okay. No shirt, no service. So as everybody is entering in, you may go ahead and go ahead and pull up your Blackboard course. We are going to be using an Excel template that I've uploaded. When we get to it, I will share the screen so that you can find it. It's in course content in chapter 2, and it's called problem 2.8a template, if you can find it now. So we will be using that template later on. Hi everybody, I missed y'all. Let's see, is Michael here? Michael hadn't. Yes, you need some, let's see, yes. Did somebody ask me a question? All right, webcams on. You can sit in your bed, but don't be lying back in your bed and um, and I have a new rule, you must have a shirt on. I don't remember what class it was, but I've had a class with a student that decided that wearing no shirt was appropriate for class. So I know it's just, how's everybody doing? I'm so glad. I don't know. I love teaching. I really enjoy my students.
Oh, nice. Didn't you say you thought you
But I'm glad to be out of the hospital. I was a sick lady. And so I'm back. And it was not COVID. It was intestinal related. I've got an infection in my stomach, and I've lost 9 pounds since the last time I saw y'all. And I don't recommend that diet plan at all. Y'all miss me a little bit? Not on Tuesday, class is canceled. My husband wrote that email. I don't even know what it said, because I was too sick to write it. I was trying to tell him how to log into Blackboard, and he's like, oh Lord, and but it did get out. So I apologize for that. I'm looking forward to sharing debits and credits with y'all today. Look, I've got, oh, well, I don't know if y'all could see, but look how my pants are. And these fit before my hospital stay. I don't normally do that in class. It was show and tell day. All right, so webcams on. Don't be lying in bed, and you must have shirts on. Lucas, I see you're mighty comfortable. You can be comfortable, but you're gonna, hey Lucas, are you gonna be able to do your Excel? That you're gonna have to work on Excel, so have Excel open, and let's be engaged in class. All right, I'm going to go ahead and start. I've got 24 of y'all in here. It does that. Okay. So glad to see your smiling faces. Today, what we're going to do is first, I'm going to push out to you some questions and about how do you increase this account? Do you debit it or credit it? I need to get an assessment of how are you understanding, where you are in class, how are you understanding debits and credits? And we'll talk about each one of those as we're going through the questions. So the first thing is I have a little exercise where we're going to learn debits and credits. Then we're going to work a problem. And this is the problem where I have set up an Excel template so that we'll work a problem in class, applying the steps to the accounting process, where we have a transaction, we have to journalize the transaction, then we post it to the general ledger, and then we prepare a trial balance. So we'll work a problem doing that on Excel. So I will also be teaching you some good Excel techniques. Okay, so Peter and AJ and Josh, I need webcams on, please.
I actually don't have a webcam on my desktop computer that I'm using to do
Okay.
classes online.
Okay. A webcam is required for class. Will you be able to get one?
Sure. Yeah.
Okay, because webcam is a requirement.
No
For
worries.
class.
Yeah, I can get one for sure.
Okay, so for today, we're good, but I just like looking at the faces.
No worries. Yeah, I'll have one for next class then.
Okay, not a problem. Just welcome to class, Peter and AJ.
I'm trying to figure mine out right now. It's not working on Zoom. It's worked for all my other classes. And I'm
Okay,
trying to figure
not
it
a
out.
problem. Just keep working on it and we'll go ahead on with class, okay? And I see Peter is still trying to connect to audio. I'd like for them to join in. So we're going to learn debits and credits, posting to the general ledger, and then calculating the ending balance of the general ledger accounts to put into a trial balance. Okay, so here we've got accounting as the language of business. And what that means is that the corporation has all kinds of transactions going on. They're selling stuff, they're buying stuff, they're paying their rent, they're paying their insurance, they're paying their utilities, they're earning revenue, they're borrowing money in order to acquire assets. All kinds of things are happening in a corporation. And the corporation has to have a process in place in order to capture those transactions and record them so that they get in the accounting information system, the AIS, that accounting information system. And the first thing that we do when we see a transaction is we've got to analyze that transaction in order to do the journal entry. What accounts were affected? How were those accounts affected? And when we look at how was that account affected, we then need to translate that into debit and credit terminology. So that's what we're going to work on first. Okay? So I'm going to push out some questions, and I want all 24 of you to answer. To increase this account, do I debit or credit? Okay. So you've got 8 of them. So go ahead and answer all 8. Again, answer and don't just, guess. I want you, this doesn't have a grade, and we're going to do this all semester long where we see how you're doing with your understanding of the material. I'll be right back while y'all are finishing answering that. Okay, 15 out of, oh,
It won't let me submit it.
Can someone help him? I'm seeing from the end, do you just click debit or credit? Do you have to submit once you've gone through the 8?
Should be at the bottom, I think.
Right, scroll down.
No, I know, I see it, but like it's like I'm clicking on the button and like nothing's happening, I guess.
Look at all the questions. I think maybe if you didn't answer one, it won't let you submit.
Griffin, did that work?
I already answered all of them. I don't know, it's just not working.
Okay, do you remember how you answered each one of them? I don't know why it's,
I mean, I guess I'll see if I can like re-answer them.
and if it doesn't, you know, when we're going through it, again, this isn't graded. It just gives me an assessment of where the class is, and then we can talk through them. Were you able to do it, Griffin? Did it?
Yeah, like pretty much I just like would click, like I would click, like for example, if my answer was debit, I would click credit and then I would like re-put my actual answer and then just like I kind of redid it for all of them and then it worked. I don't know, it was weird.
Yep. Okay, so I have 3 more students that need to finish answering. And then we'll go through each one, we'll talk about each one, and then I purchased a document writer to connect to my computer, and it came in when I was in the hospital. I worked on it hours yesterday, and it's supposed to be compatible with a Mac, but I worked until midnight last night trying to get the thing to work. So I will have a document writer instead of having to use this Blackboard if I can figure it out. So I will be using the Blackboard today. And what did I do with my, there it is. Okay, so I still have 3 students that have not answered, which means, I don't know what it means. All right, I'm gonna go ahead and end the poll. And let's share the results. So can you see? All right. Harrison.
Yeah.
What's the accounting equation? Tell me the accounting equation and I can get it up here on the board.
Assets equals liabilities minus
Is it minus or plus?
plus shareholders equity.
Okay, so assets equal liabilities plus stockholders or shareholders equity.
Mhm.
Right? Can y'all see this? Let me turn on this light over here. Can y'all see the board okay? Like I said, I've got a document writer that I purchased and it's going to work. Even if I have to pay $5,000 for somebody, no, I wouldn't pay that to install it for me. And I'm usually pretty good at installing it, and my husband is too, and we couldn't figure it out. All right, so we have the basic accounting equation. Assets equal liabilities plus stockholders' equity. Assets are the resources that a company has. Assets are the things, the stuff that a company needs in order to generate revenue. For example, my husband, retired in May, and he likes watches, and he's already got some nice dress watches. He needed a casual watch, and he wanted a tag. So we go into one of the tag stores, and they've got a display counter that displays the watches. Well, that display counter is an asset to the tag store because they need that display furniture, the display cabinet, in order to have the watches in for their customers to see. So that display counter is an asset that they're using in the production of revenue. So these assets are resources that are used in the production of revenue. The watches themselves that are in the display counter, they're an asset that we're going to learn later on that's called inventory. That is actually what the store is selling. So it is an asset called inventory that is for sale. Supplies. You take the University of Tampa. We go through, and they gave us a report on this last year because the amount that we use copy machines, a million pieces of paper. I don't know how many reams of paper the university goes through. And then of course we've got, the markers and paper clips and all the stuff that are in the supply cabinet. So these supplies are an asset that can be used in the production of revenue. So assets, again, are those resources that a company needs in order to produce revenue. Now we have an equal sign. And so it's just a simple mathematical sentence. And the right side of the equation, liabilities plus stockholders' equity, is how the company got its resources. In the textbook, they say this is the claim to those resources, okay? So a company has assets. A company has assets, those resources. The right side of the equation says, chair and this board were put together, sorry. So the right side of the equation says, how did I get the resources? A company can get its resources from creditors. So above liabilities, I am writing the word creditors. And above stockholders' equity, I'm writing the word owners. So the way that a company can get assets is that they can borrow the money. I acquired a bunch of display cabinets to show my watches in, and I borrowed the money to get them. I owe. And when we owe, whether it's cash or services, it's a liability. It's a liability. The other way that companies can get their assets are from the owners. And there are two types of stockholders' equity. There's common stock and there's retained earnings. Look on page 72. Look on page 72 of your textbook. I had to add someone to the class. So look on page 72. And page 72 has the accounting equation, assets equal like plus stockholders' equity. And then you see underneath stockholders' equity, the two types of stockholders' equity that we have: common stock and retained earnings. So common stock and retained earnings are the two types of stockholders' equity that we have. Common stock is where owners buy into the company. You want to own shares of a company, so you give the company cash, and then in exchange for that cash, you get shares of stock representing your ownership position. Okay, you get shares of stock. So one of the types of stockholders' equity we call common stock, which is contributed capital. The owners contributed capital to the company to get it started. And well, not just to get it started, even if later on in the company's life, it needs some infusion of capital. They could sell more stock, they get cash, they have owners, and so that is called paid-in capital. So common stock is also called paid-in capital or contributed capital. Paid-in capital or contributed capital. The other way that owners can contribute assets is through retained earnings. Retained earnings, the other type of stockholders' equity. Now, retained earnings, is, I'm gonna push the board back, and again, this is recorded and I'll upload the recording of it. Can't wait to get my document writer working. When you look on page 72, what causes retained earnings to change? What causes retained earnings to change?
Literally learned this shit the first week. I had to teach myself to do the homework. Now we're going over it week 3.
Excuse me? I didn't what are you, I didn't understand your answer, or what were you saying? Something about chapter 1. Chapter 1 is an introductory kind of talking about the accounting. And so now we're going into chapter 2. So what did you need to talk about in chapter 1?
I was actually just clarifying something for someone next to me.
Okay, not a problem. I'll be happy to go over anything that you don't understand. Chapter 1 is an introduction about the qualities of the character and how we communicate through financial statements, of which, you know, you will be learning. Chapter 1 was just kind of an introduction to the nouns and verbs that we use in accounting. Okay, so if you need some help with that, I'll be happy, you know, to help with you. Now I'm starting with chapter 2 with teaching the debits and credits and the accounting equation, which is what chapter 2 is about. So is that okay that we approach it that way? All right, so we've got the accounting equation, which is assets. We've got these assets that are the resources, and how we got those resources. We either got the resources from liabilities, creditors where we owe, or we got them from owners. And the two ways that we get them from owners are the owners contribute capital directly to the company, common stock, are paid in capital, or they retain earnings within the company. They're generating revenue, they're paying their expenses. And what is revenues minus expenses? What did you read about what is revenue minus
Income.
Good, net income. So retained earnings is how much of their net income have they retained within the company? So what causes retained earnings to change is net income makes it go up, so revenues make it go up, expenses make it go down because expenses reduce our net income, and then there's this thing called dividends. And what are dividends?
It's like if you're like if you own like common stock in the company, or like if you own a share of the company, you'll get returns on your shares. So basically, if I just have a question, like, so
Harrison?
for retained earnings, so it's net income slash losses minus dividends, right? So retained earnings is
Right, so
basically,
revenues minus expenses equals net income, right?
I'm saying, but then for retained earnings, you'd subtract the dividends from that, and that'd be
Exactly,
so
because,
retained earnings is like what's left after basically like everything. Is that
well,
kind of
not
what?
everything. Retained earnings is how much of the earnings, and earnings meaning net income, how much of the net income that this company has generated over its lifetime has it retained? Just like the title says, how much has it retained? Well, what they don't retain are what they distribute to the owners. So dividends are distributions to owners. In other words, companies are generating revenue, they're paying their expenses, and revenues minus expenses, as Harrison said, equals net income. Now, companies can choose to do one or two things. They can either retain all of their earnings within the company, or they can distribute part of the earnings to the company. When they distribute part of the earnings to the owners, when they distribute part of the earnings that the company has earned to the owners, what do we call that?
It's a dividend.
Dividends, okay? Dividends. So again, assets, the resources that companies have to generate revenue. The right side of the equation is, how did I get the resources? How did I get the resources? How did I get the assets? And we could either get it from borrowing, where we owe, which is a liability, or we got it from the owners. And there are two ways that we get it from the owners. One is contributed capital or common stock, where they, buy into the company, they contribute cash to the company, and they have an ownership position. The second way that owners contribute assets is by retaining earnings or retaining net income within the company itself, instead of distributing them as dividends. We're going to be working with this so that right now you're memorizing this accounting equation and what it is and how we increase or decrease it, debits or credits. And we're going to be working with this and applying this concept through journal entries so that you can memorize and then understand. Okay? All right. So keep your book on page 72, and let's go through these questions, these polling questions. Cash is what kind of an account? Asset, liability, equity?
Asset.
Good. Cash is an asset. And how do we increase assets?
Increase debit.
Good. Increase is a debit. Assets are on the left side of the equation. So to increase on the left side of the equation, which are assets, we debit. To increase anything on the right side of the equation, the liabilities and the stockholders' equity, we credit. And that way our debits equal our credits. We have this mathematical sentence that has to equal, and debits have to equal credits. So to increase assets, which are on the left side of the equation, we debit. To increase anything on the right side of the equation, we credit. Okay, so that's what the diagram on page 72 is showing you. So cash is an asset, it's a resource. And to increase cash, we debit. Okay. Now supplies. What kind of an account is supplies? Sienna, what kind of an account is supplies?
An asset account.
Good, an asset. And everybody, y'all can unmute and just like we would be in class, and you can just, I want to hear the whole class saying this, just like we were in the classroom, okay? So supplies is an asset, as Sienna said. Sienna, how do we increase supplies?
You debit it. So
Good, you debit it because it's an asset. Owen, supplies expense. Ooh, I'm giving you a tough one. Can you handle it?
I think it's a asset. You debit it.
All right, teammates, remember this is a team. Can y'all believe we have football starting on Sunday? I got my fantasy draft done and I forgot that we were doing it. And so I auto draft because I was like, Lisa, you auto draft. And I usually don't auto draft, but I did this year because I forgot it was draft day. So we've got assets, which are a resource. Now, would supplies the expense be a resource? Is that something that is something that we have to incur in order to generate revenue? But what is supplies expense? Is it it's not an asset. Is it a liability? Do we owe for it? Or stockholders' equity?
It's a part of stockholders' equity.
Thank you. It's a part of stockholders' equity. Remember, expenses reduce net income. Expenses reduce net income. And net income affects which account? Ahmed, expenses affect which account? Or net income affects what account?
Retained earnings.
Good, somebody help him out. Retained earnings. Remember, what causes change in retained earnings is, write this down in your book, in your notes, please. We have beginning retained earnings. And remember, retained earnings is one of your types of stockholders' equity. So we have beginning retained earnings. And what makes retained earnings go up is net income. So you've got beginning retained earnings plus net income. And on the side of net income, you may want to put parentheses. How do we calculate net income? How do we calculate net income?
Revenue minus expenses.
Revenue minus expenses. Revenue minus expenses. So we've got beginning retained earnings plus net income, and net income is revenues minus expenses. And then minus dividends, those distributions to the owners. And the sum of those equals retained earnings. Ending retained earnings. So beginning retained earnings plus net income, and net income is revenues minus expenses, minus dividends equals ending retained earnings. I see some of you aren't writing this in your notes. And this is a concept that we're going to be using over and over and over again. Okay? So understand what causes change in one of the stockholder equity accounts, retained earnings. So now let's get back to this supplies expense, Harrison. Supplies expense is an expense, and it reduces net income. So which one of these accounts, assets, liabilities, or stockholders' equity, does expenses affect?
Liabilities.
Someone help him out. This is a team, so help
Stockholders'
him out.
equity, because
Good.
it affects the retained earnings.
Good. It affects your retained earnings, which is stockholders' equity. Now, Harrison, I understand why you may say a liability, because the other side of the journal entry could be that I still owe for it. But we're looking at the expense account itself. And the expense account itself reduces net income, which, if net income is lower, then retained earnings is not going to go up as much. So expenses reduce retained earnings because they reduce net income. And how do we reduce anything? How do we decrease or reduce anything on the right side of the equation? Debit or credit?
Debit.
Debit. Good. So to increase on the right side of the equation, to increase liabilities and stockholders' equity, we credit. So to decrease it, we debit. Okay? And Michael, I owe you an apology in that yesterday, I saw that you signed up for office hours, and I just, with it being Labor Day, blanked out that I had office hours. So I owe you an apology for that, and we can set up a time to go over if your question doesn't get answered. Okay?
All right. It's all right.
So
It's all right.
I totally apologize for that. All my fault. Okay? So get a moment to process this about expenses. John.
Yes.
Why do we debit expenses to increase them? It's the same thing that I just said, but I worded it differently.
You debit expenses to increase them?
Right. So you debit expenses to increase them because they have the effect of what?
Paying in cash, or like it's pulling out of your, or I'm not entirely aware.
That's okay. This
Yeah.
is why we do this in class.
Yep.
So expenses reduce net income, right?
Yeah. Yes.
Okay. So expenses reduce net income.
Mm-hmm.
And the less net income that I have, the lower my retained earnings is going to be.
Mm-hmm.
Do you follow that?
Yes.
Okay. So since expenses decrease retained earnings, how do we decrease anything on the right side of the equation?
Through
Debit or credit? You got a 50-50 shot.
Yeah, through credit, I believe.
Debit.
Debit, excuse me.
That's not a problem. That's
What I
just,
said is-
we're just learning this, right? We're just seeing it. Okay. It's okay we turn it into a learning process. So expenses have debits because it has the effect of lowering retained earnings, which is stockholders' equity. And to reduce anything on the right side of the equation, we debit.
Yes.
Okay?
Mm-hmm.
We're going to practice this and practice this. So did that help you, John?
Yes. Thank you.
Okay. Anybody else have questions? Go ahead.
So like say you're increasing the supplies expense, so that's a normal debit, right?
Correct.
So like, I was trying to think about it like from when I took my accounting class in high school.
Uh-huh.
It would be like a cash credit, and then you debit like the supplies expense account, right?
So you would debit supplies expense, and then if you paid for it, you would credit cash. If you're going to pay for it later, you would credit accounts payable. So that's the part of the transaction that you were thinking about.
Yeah.
Right? We're looking at the expense part of the journal entry
I was
itself.
just trying to like apply it to something so I could like better understand it.
Right. And when you said because of accounts payable, I knew where your thinking was on it. So, and we're going to practice some journal entries. And when we're practicing them, ask questions. Just, you unmute yourselves so that just like you would be in class, and just because I want to hear the whole class answer a question. When I snap my fingers, it's something that I've done for 20 years. When I snap my finger, that means I want a debit or credit answer. Okay. And I want to get into where I don't even snap my fingers because y'all understand it so quickly. Okay. So that's supplies expense. Supplies itself is an asset. Those are the unused supplies. When the supplies are used in the production of revenue, they become an expense. We're going to see in chapter 3 how we do that adjusting entry to make that asset become an expense. I'm introducing concepts so that when you read chapter 3, it'll start making sense. Chapter 3 is a booger bear. Okay. Now, accounts receivable. What kind of an account is accounts receivable?
An asset account.
Good, it's an asset. Taylor, what does it represent? What is accounts receivable?
I'm not really entirely sure, but the way I think I understand it is like whenever you put something, like you do something, a service, and someone pays for it like on account, like.
Okay, perfect. So say I perform services on account, as Taylor said, that phrase on account. When you see the phrase on account, that means that it's going to be paid later or you're going to receive the money later. So say that I perform services, I'm a CPA, I did the tax return for somebody and I gave them an invoice and they're going to pay me later. Well, accounts receivable represents the amount of money that customers owe you. In other words, you have the right to receive money in the future, that your customers are going to pay you in the future. So you have the right to receive money in the future. Accounts payable, on the other hand, is what kind of an account?
A liability.
Good, a liability, because you have the obligation to pay in the future. So accounts receivable is money that is owed to you. It's an asset, and to increase it, we debit. Accounts payable, on the other hand, is a liability. It's where you owe money. Just like Harrison had said earlier, supplies expense. If I bought the supplies on account, I would debit supplies expense and credit accounts payable. Because again, how do we increase anything on the right side of the equation? How do we increase liabilities and stockholders' equity?
Credit.
We
Credit.
Thank you. We credit. Good, Amanda. Okay.
Wait, I just have a question.
Sure, Erin.
Can you just explain like how to tell if you need to increase or decrease? Like, I'm just a little confused on like.
Erin, we're going to, after we go through knowing how accounts are, like, do I debit it to increase it or credit it to increase? We're going to work a problem doing journal entries.
Oh, okay. Okay.
Okay.
Thank
So
you.
you're quite welcome. All right. So do you understand the difference between accounts receivable and accounts payable? Michael, what's accounts receivable?
Accounts that you can get them. It's not cold hard cash, but you can get them later.
Right, you're gonna get them later. It's money that
Yeah.
customers owe you. So you're gonna get,
Yeah.
you're gonna get cash in the future. You're gonna receive cash. Now, Michael, what kind of an account is it?
It's a liability or accounts receivable.
Yes, accounts receivable.
Asset. It's an asset.
Asset, good. Sydney, but the NEY Sydney, Fletcher. Tell me, what is accounts payable?
Accounts payable is something that you owe.
Good.
to someone
So it's something that I owe. So what kind of an account is it?
a liability.
Very good, a liability. And how do we increase it? Debit or credit?
Credit. Credit.
Credit, good, because it's on the right side of the equation. Good job. All right, now we're to utilities expense. It's the same thing as supplies expense. It's just we put the adjective describing what kind of expense it is. And tell me about utilities expense. How about Joel? So what is utilities expense? What kind of an account?
Credit.
Okay, well, before we get to, it's a debit, but let's talk ourselves through it so that we understand it. So what kind of an account is it? Utilities expense.
Expense account.
Oh, nice job. It's an expense account. What in the accounting equation, assets equal liabilities plus stockholders' equity, which one of those three does utilities expense affect?
Liabilities.
Okay, team, help him out. Remember, this is we're in class, so help him out.
It's stockholders' equity.
Okay, good. It affects stockholders' equity. And I didn't see who said that. Who said that?
Abby.
Abby. Thank you, Abby. So it affects stockholders' equity. Which one of the two types of stockholders' equity does it affect?
Retained earnings.
Nice job. Retained earnings. And what do expenses do to retained earnings? Do they increase them or decrease them?
Decrease.
Decrease. Very good. How do we decrease anything on the right side of the equation?
Debit.
Debit. So Joel, do you see how and again, you're just being exposed to this, so we'll go over it and utilize it. So did you understand that flow through that we just did, Joel? Or
Yeah.
anybody? Do you understand it better?
Yep.
Okay, we're going to practice it. We're going to apply it and practice it. Okay, so again, expenses affect stockholders' equity. In particular, they affect retained earnings. They make retained earnings go down because expenses cause net income to go down. And to decrease stockholders' equity, we debit. So to increase expenses, the more expenses I have, the lower my retained earnings is going to be. Therefore, to increase expenses, we debit. Okay. Now, this class is being recorded, and I will be uploading, the file so that you can listen to this over and over and over and look at page 72. Okay, Joel, are you on page 72? And do you see under the expenses how the increase is a debit? Y'all need to memorize that illustration on page 72. And as we work with it and apply it, then your memorization will become understanding. Okay, dividends. Dividends. So Jack, talk to me about dividends. First of all, what are dividends?
It's what the company pays its stockholders.
Okay,
Yeah.
good. It's a distribution to stockholders. Very good. So it's a distribution to stockholders where I'm distributing part of the net income to the stockholders. Which one of the accounts in the accounting equation does it affect? Assets, liabilities, or stockholders' equity?
Stockholder equity.
Good. Stockholders' equity, perfect. Now, which one of the two, the contributed capital or the common stock or retained earnings, which one does it affect?
Retained earnings.
Very good, retained earnings. Now, what does it do to retained earnings? Do dividends make it go up or make it go down?
Make it go down.
Good, Jack. So it makes it go down. How do you decrease anything on the right side of the equation?
With credit.
Try again.
With debit.
Debit. So to increase on the right side of the equation, we credit. To decrease on the right side of the equation, we debit. Is that better?
Yep.
Okay. Anybody have any questions? So now, you were about 50-50 on dividends. What is the correct answer? How do we increase dividends? Debit or credit? Jack, you just went through this.
Yeah. With how do you increase the dividends?
Yeah.
Debit.
Debit, very good. We debit dividends because it has the effect of decreasing stockholders' equity, in particular retained earnings. Questions? And again, we're going to be applying this and using it over and over, but you need to start, with understanding that concept. All right, number 8, deferred, and notice that I put in parentheses unearned revenue. This textbook uses deferred revenue. It is often referred to as unearned revenue. So either deferred revenue or unearned revenue, they're used interchangeably. So deferred revenue, does anybody know what kind of an account this is? What kind of an account is deferred revenue? And Sydney with the NIE.
I'm just gonna say stockholders' equity.
Okay, and I assume that you said that because you see the word revenue in it?
Yeah.
All right. This is a liability. And this represents any services or products that a company owes customers. Deferred or unearned. Deferred or unearned means that I'm going to earn the revenue later on. I'm going to earn the revenue later on. Let me give you an example. I used to have a flight to Chicago. We're not going to go because of COVID. My son lives there. So we had a flight to Chicago. So I got on southwest.com and I booked my flight to Chicago. And this isn't just storytelling. This is giving an example of what unearned revenue is. Okay. So I paid Southwest. Whenever we book a flight, we have to pay the airline. So Southwest got my cash right? I paid with them for credit card, but they get cash for it. So I paid Southwest. But has Southwest earned that revenue? Have they performed the service yet? No, I'm not going to fly until November for Thanksgiving. I wish I'm not now, but anyway. So the company got cash, but they have not earned the revenue yet. It is unearned revenue. Southwest owes me a flight. Southwest owes me a flight. So if the company owes, what do we call it, Sydney?
Oh, account payable. Oh, no. Yeah.
Well, accounts payable is a type of this same account. Is it an asset, liability, or stockholders'
Oh, a
equity?
liability.
Very good. It's a liability, just like accounts payable is. So deferred or unearned revenue is a liability. It represents when they have been prepaid for a product or a service that they're going to deliver later on. Only earned revenue goes into the revenue account. Only earned revenue goes into the revenue account. Unearned revenue or deferred revenue is a liability. You owe the services. You think of like the Wall Street Journal. I have a subscription to the Wall Street Journal, and I pay Wall Street Journal, and then they will in turn, push the Wall Street. I have it on my iPhone. I will get access to the Wall Street Journal, on a daily basis. So I will pay for the Wall Street Journal 1 month or 6 months or a 1 year subscription, however long I want to buy a subscription for, and I pay them. But it is unearned revenue. It's a liability to Wall Street Journal until they deliver the Wall Street Journal to me. So if they're delivering it daily, they would recognize 1/365th of how much I paid every day. We will get into this in chapter 3. I'm trying to open up concepts, open up your mind of what we're going to be seeing in chapters 2 and 3. Chapters 2 and 3 are critical to the rest of the semester. Okay? So Bella, what is deferred or unearned revenue?
It's like they haven't done the service yet, so you haven't gotten the revenue yet. Like the flight that you said.
You haven't earned the revenue yet. Good.
Yeah.
And so what kind of an account is it?
Liabilities.
Liability. And how do we increase liability?
Credit.
Nice job. Nice job. Okay. So any questions about what we just went through? All right. Now what we're going to do is we're going to apply the knowledge. We're going to, you read in the textbook and going through Alex that companies have transactions, and the very first thing that happens when we have a transaction, the very first thing that happens is we do a journal entry. We have to look at what accounts are affected. How were they affected? Did they go up or did they go down? And then we translate that into debit and credit terminology. Then we do the journal entry. So the first physical thing that you see when there's been a transaction in the company is you do the journal entry. Let me find in chapter 2 where they've got, and it may be in chapter 3, where it talks about, okay, debits and credits are in part B. And then if you look on page 74, what do we do after we have done the journal entry? What is the next step? So on page 71, you started the debits and credits, and we do the journal entries. And then on page 70, and you see the journal entries on page 74. And then, I'm sorry, page 75. What do we do after we record the transactions in a journal? Recording the transaction in a journal is doing journal entries. Then what is the next thing that we do? It's at the bottom of page 75. Or in your ebook, it could be the top of page 76. I don't know which one. Which one is it? So what is the next thing? What is in big red letters that we see? What is the next thing we do?
The general ledger.
Good. We post to the general ledger. So we post the journal entries to the general ledger. Debit means on the left, and credit means on the right. That's all it means. Don't try and put any other kind of definition to it. So we've got these journal entries where we debited certain accounts and then we credited certain accounts. And then we go to post them to the general ledger. We're going to put the debits on the left side and the credits on the right side. Look at the very bottom of page 77. Those T accounts are how we represent the general ledger on the board in class. So if you turn the page to 78 and 79, when you read the textbook, you saw that they posted the journal entries to each of the general ledgers, and they put the debit on the left and the credit on the right. Okay? Then after we post to the journal entries to the general ledger, if you look on page 83, you read that we then prepare a trial balance. And in order to prepare a trial balance, we have to calculate the ending balance of each one of our T accounts. As you can see on page 82, the illustration on 82. So this is what we're going to do now. On page 102, we're going to apply. So on page 102, there is problem 28A. There's problem 28A. And go into your Blackboard course. Okay, I'm gonna start sharing screen with you now, okay? And I am going to all right, I'm going to start sharing my screen now. All right, I'm in Blackboard. And if you go into course content and you go into chapter 2, you will see down here at the bottom that I have uploaded an Excel workbook. Download that workbook and we're going to work problem 28A within Excel. So we're going to be accomplishing two things. We're going to, one, learn accounting, and two, we're going to start seeing how we can efficiently use Excel. Do you need to know Excel in business? In life, do you need to know Excel? Absolutely. If you don't have Excel, you're not employable as a business person. So go ahead and download that Excel file. I'm going to stop sharing and I'm going to bring up the Excel file. All right, and then I'm going to start sharing again. Okay, so this is what the template looks like. Was everybody able to download the template? I had some students that had problems in the 8 o'clock class, but so let me know if you were not able to download it. Okay, so let's go ahead and see, apply work problem 28A, and we're also going to learn Excel techniques, okay? So let's first, we've got Pirates Incorporated, and we have what their balances are at the beginning of September. And then it gave us some September transactions.
Mine doesn't look like that.
Yeah, mine's a little different too.
Yeah, mine looks different.
Does it look like that? Does it look like that?
Yeah, it looks like that.
Okay. Do you see down at the bottom where I am down here? This is an Excel workbook that has 3 worksheets in it. So click on the one that has JEs for journal entries. Is everybody okay there? If it didn't look like that, does it now look like mine? Okay. So this is an Excel workbook. And within the workbook, you can create worksheets. So this workbook, I've created 3 worksheets. One is where I'm going to do the journal entries. The second worksheet is where I've got the general ledger accounts that I'm going to post the journal entries to. And then the third worksheet is where I'm going to put the ending balances of each one of the accounts.
I'm having trouble opening the template. I'm not sure. Like it's not doing anything when I click the link.
Okay, I don't know why. I don't know why. Well, most can open it and some can't. Oh, do you have Excel?
Yes, ma'am.
Huh. All right, what I want you to do is go ahead and write, well, this is going to be recorded, and then you can use your camera to take a screenshot, and then we'll figure out why. I don't know why you aren't able to download the file, but we'll figure it out. Does anybody have any tricks? Were y'all able to just click on it and download it? Did anybody else run into any problems? Y'all are shaking your head, but I can't see y'all since I'm sharing screen. I need verbal affirmation.
I didn't have any problems.
Yeah, I had no problems.
Okay, so whichever student it was, who was it that is having problems?
Abby.
Abby. All right. Abby, let me. Oh, I'm sharing my screen. Y'all can see all this, huh? Let me. I'm gonna go into my email and Abby, what is your last name? Abby, what is your last name?
Gann, Gann.
Is it ABB?
It's Abigail, Abigail.
And the last name is?
Gann, Gann.
I don't know why you aren't coming up as.
You can try Abby, ABI.
All right, I'm not seeing it where it's populated. I will find you an email. In the meantime, just write down or take pictures of what we're doing, okay?
Okay, thank you.
I'll get this squared away and then list. So I'm going back into sharing my Excel template. All right, so I'm in journal entries, and let's do the first journal entry. Okay, wait, sorry. So we've got Pirates Incorporated that began September with beginning balances, and then we have September journal entries that we're going to do, and then we're going to post them to the general ledger. So the first thing that we want to do is requirement 1 says record each transaction. So on September 1st, we provide service to customers for cash. So what is my journal entry when I provide services to customers for cash? What did I get? What did I receive?
Cash, so that would be a debit, right?
Right, so how do I make cash go up? We
debit it.
Debit. So I'm going to debit.
$4,700.
Pardon me?
It's a cash debit for $4,700, right?
Right. So I'm a debit cash for $4,700. And what am I going to credit for $4,700? Why did I get the cash?
Service revenue.
Okay, great. Service revenue. Now, proper journal entry format is debits are on top, credits are on the bottom, and credits are indented. So to indent, right up here in my toolbar, I've got increase indent. So I'm going to hit indent, and then I'm going to type service revenue, and I'll credit service revenue for $4,700. Now, September 2nd, we purchased land for $6,400, but how did we pay for the land? Did we pay cash or did we borrow money?
We borrowed money.
Good, we borrowed money. I need everybody participating. So what is my journal entry? What did I get?
You're gonna debit land and credit notes payable.
Good, I'm gonna debit land, and let me say, excuse me, I do have a link where you're going to upload this Excel file, because then it's for 0 points, but I want to look at your Excel file to give you feedback on your Excel technique or on your sheet itself. So you're going to be uploading this, so don't be sitting there doing nothing. And for those that don't have, for Abby, I will get it to you and then you can enter it in. Or if you're just writing it down, you can upload your screenshot. Okay?
Okay, thank you.
You're welcome. All right, so we need to debit land because land is an asset. And to increase an asset, we debit or credit?
Debit.
Debit, good. And I'm going to credit what account? Someone's already told me.
Notes payable.
Notes payable. Notes payable is what kind of an account?
A liability.
A liability we owe. How do we increase liabilities?
You credit.
Good, we credit. Okay, we credit. So again, make sure that you're getting this into Excel. All right, September 4th, we received a bill, an invoice is a bill from the newspaper for some advertising that we did on September 2nd. So what am I going to do? I got a bill in the mail for some advertising expense that I had.
When you debit advertising expense?
Yes, ma'am. Good. So we're going to debit advertising expense because to increase expenses, we debit. And how much was it? $500? And what am I going to credit? Notice I'm going to hit my indent. I got the bill in the mail. Have I paid for it? So
Would it
Aaron,
be
what am I?
accounts payable?
Go ahead. Who?
I'm sorry, I didn't know you were asking someone, but would
No,
it be
didn't. Go ahead. Whoever. I don't care who says it. Somebody. So what am I going to credit? Do I owe for it?
yeah. Wait, do we pay it right away though?
No, it just says that we received the invoice. So we received the invoice. So we got a bill in the mail.
So is it accounts payable?
It is accounts payable. So I'm going to credit accounts payable. Accounts payable is a liability. And how do we increase liabilities? Debit or credit?
Credit.
Credit. So here I incurred advertising expense that I'm going to pay for it later. Debit the expense, showing that my expenses went up, and credit my payable, showing that I have a liability that I need to pay for later. On September 8th, provide service to customers on account for $6,000. So I provided services on account. What does on account mean?
Like in the future,
What's going to happen in the future?
like you still got paid, but you have to provide that service in the future.
Well, this says that I provided services to the customers on account. So I've already provided the services. The on account means that my customers are going to pay me later. So if my customers owe me money because they're going to pay me later, what account does it go into?
Assets.
Okay, good. An asset. And which asset in particular?
Accounts receivable.
Accounts receivable. Accounts receivable. Remember, accounts receivable is that asset account that shows how much customers owe me. Customers owe me. I'm going to receive the money in the future. So we'll debit accounts receivable because it's an asset. And what am I going to credit? Why do my customers owe me?
Service revenue.
Good, because I earned revenue. Now I can type in service revenue, but I'm feeling a little lazy right now. Not really, but I've already credited service revenue up here. So let me teach you a shortcut in Excel. If I hit Command C, if it's a Mac, Control C, if it's a Windows, a PC. So a shortcut is Control C, and then I want to credit service revenue in September 8th. I'll hit Control V. Command C, Command V, there we go. So your cut and paste shortcuts are Control C is cut, Control V is paste. So all I did is I went up to what I wanted to copy, Control C, And then I went down to where I wanted to paste it, Control V, so I didn't have to type it again. So we credit service revenue because revenue increases retained earnings, and to increase retained earnings, we credit. September 10th, we bought supplies on account for $1,100. So give me my journal entry.
Supplies.
Okay, good. Supplies is an asset. To increase an asset, we credit. And we debit, sorry. Supplies is an asset, and to increase an asset, we debit. Now, what am I going to credit?
Accounts payable.
Nice job. So I can type it again, or I can go up here and copy and paste it. Let Excel be your friend. Do some work for you. Now, September 13th, I pay Crimson Company for the long-term note. You remember up here on September 2nd that we bought land and we borrowed the money? Well, now I'm paying 4,000 of the 6,400. So what am I going to debit?
Notes payable.
Good. I'm going to debit notes payable. This class, this is usually the 10 o'clock class is usually my more engaged class, because 8 o'clock, they're still sleepyheads. And they were just engaged and saying, so let's get the whole class involved. So I'm going to debit notes payable. And when I debited notes payable, what happened to my accounting equation? Notes payable is what kind of an account?
Liability.
Good job, a liability. And when I debited the liability, did I increase it or decrease it?
You decreased it.
Good, so I just decreased the liability account, notes payable. And what am I going to credit? Cash. Good. Because how did I pay for the notes payable? How did I make my notes payable go down? I sent them a check. I paid with cash. Cash is an asset and it went down. And so we credit the asset to make it go down. And anyway, along the way, if you're not understanding the journal entry, class is the time to ask. Now on September 18th, we received 5,000 from customers on account. So do you remember these customers up here that said, thank you, but I'll pay you later? Well, now they're paying me later. They're paying me 5,000 of the 6,000. So what did I get?
Cash.
Cash. Cash is an asset. We debit cash to make it increase. And what am I going to credit? Why did I get the cash?
Services performed? Or
Right. Well, we had already recognized the revenue on September 8th.
mm-hmm.
So what are we making go down? When the customers pay us, they owe us less money.
Accounts
receivable.
Nice job. Accounts receivable. Accounts receivable went down, which is an asset. So we credit the asset, making it go down because my customers owe me less money. Cash is an asset. Accounts receivable is an asset. We call this journal entry an asset exchange. One asset went up, another asset went down. September 20th, I pay September's rent of $900. So I paid rent. Give me my journal entry.
Rent expense.
Good, nice. So I'm going to debit rent expense and credit
Cash.
cash. When I credited cash, did my cash go up or down?
Down.
Down, good job. Now I pay my employees $4,000. No, I pay my utility bill for $2,000. Sorry about that. So I pay my utility bill for $2,000.
So you're gonna wanna debit the utilities expense and credit cash.
Nice, 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 nice. Debit utilities expense, expense went up, debit, credit cash, because I paid, cash went down, credit. Now I'm paying my employees $4,000.
The accounts payable for your debit and then cash for your credit.
Did
Salary
I ever put what I owe my employees into a payable?
No, you don't.
No. So what am I going to debit?
Salaries expense.
Good. Salaries. I'm a debit salaries expense, and what am I going to credit?
Cash.
Cash. Right? The company's cash went down because they paid their employees. Expense went up, debit. Cash went down, credit. And then on September 30th, I paid dividends of $1,100. It's my journal entry.
Debit dividends and credit cash.
Nice. Debit dividends and credit cash. Dividends affect which account?
Retained earnings.
Good. Retained earnings, which is a type of stockholders' equity. So dividends cause retained earnings to go down. The particular type of stockholders' equity that went down was retained earnings. And to decrease stockholders' equity, we debit. So we debit dividends and credit cash. So now we've posted we've prepared all of our journal entries. Now we need to post the journal entries to the general ledger, the T accounts. Now here's where I'm going to show you an Excel technique called cell referencing that you must learn to do. Okay. So remember, my general ledger or my T accounts are in a separate worksheet. So my first journal entry that I need to post from September 1st is a debit to cash and a credit to service revenue. So watch what I'm going to do, because I don't want to make a mistake that, suppose I enter this in as 4,800. I've made a mistake. So I'm going to go into the general ledger, and debit means that I'm going to post on the left. So I'm going to go on the left side and I'm going to put equal. Then I'm going to go to my journal entry and I click on the $4,700 debit to cash, and then I hit enter. Isn't that cool? Like cool as shit, really. I mean, this is cool. So when I look at my 4,700 in my cash account, look up here at my f of x function. Did I type in 4,700? You see 4,700 up there? I see some of you squinting, but I can't make the f of x bigger. What is in there, it says equal, and then it has JEs, which is the name of the worksheet it came from, and then it has C3. So this 4,700 came from the cell C3 in the JEs worksheet. And sure enough, this is cell C3. That's called cell referencing. Get used to doing it. This is efficient use of Excel. So now I'm going to go to service revenue, and it's a credit. So I'm going on the right side, and I'm going to put equal. I'm going to go to my journal entries. I'm going to click on the credit, and then I'm going to hit enter. And I'm going to do this for each one of my journal entries. Now, I'm going to highlight these two because that means that I've already posted them. So now I've got a debit to land and a credit to notes payable. So I'm going to go into land, the left side, because it's a debit, equal. I click on the 6,400, hit enter, and again, you can see that it's a formula referencing the cell that I pulled it from. So each of you go ahead and post each one of your journal entries into your general ledger. And if you have a question, just ask.
Yeah, wait, I have a question again. So on the left-hand side is the credit?
Debit.
Debit, okay, so debit, credit, okay.
Right, so debit means on the left and credit means on the right. I love this cell referencing. Were y'all familiar with this skill? Did y'all know how to do cell referencing before?
I've done it before.
Yeah, I have done it before.
Good, good.
I didn't know how to do it in between like different things, but I knew how to do it on the same one.
Good.
Yeah.
This is a skill that you'll be using this semester, and I'm going to be, looking for it, especially in your financial statement analysis project. So go ahead and post all of your journal entries. And you can see that I'm highlighting them as I post them to make sure that I post each one, that I don't skip it. Is everybody posting away? I assume y'all are being real quiet because you're just posting away like I am. And remember, you're going to turn these in. Okay. Oh, figure that. Okay. So I've posted all of my journal entries into my general ledger. And I'll give y'all a few more minutes because put your, I know it goes away. I wish it would stay up but give me a hands up when you have finished posting your journal entries. Or thumbs up, you know that, how you can do the thumbs up on the. Yeah, some of y'all that are, well, some didn't have webcam, I know, but I've got more of y'all now, well, 4 of you. All right, I'm gonna stop sharing my screen just for a minute. And go ahead and, since I can see all of y'all now in one screen, go ahead and give me, you know, the reactions button, how you can do a thumbs up. Give me a thumbs up if you have finished posting your journal entries to the general ledger. Okay, about half of y'all. So I'll give y'all about 5 more minutes. Okay, cool.
I'm done. I'm not really sure to do the reaction button though.
Look, do you see the menu down at the bottom of your Zoom?
Mm.
Do you see reactions?
No.
On the very far right.
No, mine's not set up like that.
Can someone maybe, I don't think because I'm the host that mine is different. Is that where everybody else's is, down at the bottom of the, and to the right?
Bottom right.
It's the reactions with the face on it, and it's just a thumbs up.
Yeah, no, it just says leave meeting in the corner of my screen.
Mine's next to the share screen button.
Yours has what?
My reactions button is to the right of the share screen button.
Oh, okay, you're telling to the right of the share screen. Okay, so I think most of you have finished. Okay, let's do it one last time. Give me a thumbs up because they go away. So everybody, let me see how many. Give me a thumbs up. Okay, perfect. All right, I'm going to go ahead back into sharing the screen. And so that is where I have posted into the general ledger all of the journal entries that we did. Now, the next thing that we need to do before we post our trial balance is we need to calculate what is the ending balance of each one of these accounts. Now, remember, These are the journal entries for September. Did September start off the year with beginning balances? So look at requirement number 3 at the top of page 103. It says calculate the balance of each account at September 30th. And then there's a big hint. Be sure to include the balance at the beginning of each September, beginning of September into your T account.
Professor, I have one thing. Class is supposed to be, or it's scheduled to be over in a couple minutes.
In 10 minutes.
10?
11:50.
Oh, I had it as 11:40. My apologies.
Not a problem.
Just didn't want you to start going and get cut off.
Yeah, no, I appreciate that. So let's go ahead and I appreciate you helping me with the time. Because I would teach all day long. I love it. So let's go ahead and enter in the beginning balances. Do you see cash has a debit of 6,500? So I'm going to go into cash and I'm going to put in the 6,500. In accounts receivable, I'm going to put the debit of 2,500. So I'm entering in the beginning balances now. Supplies has a debit of 7,600. Land was 11,200. Now accounts payable is a credit of 7,500. So I'm going to put it on the right side. And notes payable was 3,000. And then common stock is 9,000. And retained earnings is 8,300. So now I've entered the beginning balances in. And what we're going to do is we're going to spend the rest of the class meeting using Excel to calculate my ending balances. When you're in Excel, you should never, ever have a calculator in your hand. Let Excel do the work. So what I'm going to do is I'm going to add up the debit column, add up the credit column, and take the difference between the two in order to calculate the ending balance. So watch this. I want to sum up the debit column, and in my toolbar, I have this big sigma, auto sum. If you don't have it, do you see this formulas right here? Where you can get it through clicking on formulas also. I just chose to have it in my toolbar because I use it all the time. So I want to auto sum, and notice that it automatically highlights what it thinks you want to add up. And it was correct. That's what I want to add up, is that whole column. So I'm just going to hit enter, and it gave me the sum. Notice that using the sigma, it highlighted exactly what I wanted it to highlight, and then I hit enter, and it gives me the sum of the two. Now I need to know what is the sum of the credit column. Now I can do the same thing, auto sum, and then hit enter. Or I could copy the formula. Do you remember Control C, Control V? Copy, paste. I can just copy. I'm going to hit Control C. I'm going to come over here and hit Control V, and notice that it copied the formula relatively. Do you see in my debit is the sum of A3 through A8? When I copied it to the credit, it copied relatively because I was copying into the next column over. It knew that I wanted to sum up B3 through B8, not A3 through A8. So now all I have to do is go to each one of the accounts, and in the debit and the credit side, I hit Control C on my formula from the debit side. And now I'm just going to go through each one of them, each one of the accounts, Control V, Control V. Here's the debit, Control V. Here's the credit, Control V, Control V, Control V. I think y'all see how easy it is copying the formulas relatively. So I don't have to keep doing it. Now, can we get another, this is cool as, you know what? Let Excel do the work. So every one of my general ledger accounts, I'm summing up the debit column and the credit column using a formula that I can just copy over because Excel copies relatively. All right, wasn't that cool as all get out? Am I the only one excited about Excel? Now we've got 4 minutes left in class and we'll stop here, and then on Thursday, we'll finish the trial balance portion of this problem, and then you will upload it on Thursday, and then we'll start chapter 3. We won't have 5 minutes left to finish this, and then we'll start chapter 3. Read chapter 3 3 times. It's a booger bear. So, but now let's go ahead and calculate what is my ending balance in cash. How much cash do I have? Well, it's the difference between the two. And so it's going to be a formula equal my debit minus my credit. So A9 minus B9. And I can copy this formula to every account that has the debit side larger than the credit side. So I'm just having Excel calculate the ending balance of each one of my debits. Now for the accounts that have the credit side larger, it's going to be equal the credit minus the debit. And now I can copy and paste to each one of the credit accounts that formula. So now I've calculated, so I have $4,200 of cash. My land is $17,600. My notes payable is $5,400. So I've copied I've used a formula and calculated the ending balance of each one of my accounts, okay? So on Thursday, I'm going to stop sharing. On Thursday, we will do the trial balance portion of this. Won't take 5 minutes. And then we're going to get into chapter 3. Chapter 3 is about adjusting journal entries, closing entries, and the financial statements. And be prepared. You know you have to do the SMART book. If you don't, it's just a booger bear of a chapter. So we're going to be on our A games, working problems, as we describe the concepts, okay, so that we can keep ourselves actively engaged. I know that I can't sit at a Zoom meeting and just listen to somebody talk at me for 2 hours. It's not going to happen. So we're going to have interactive class just like this. Okie dokie. All right, so save your worksheet, and then for class on Thursday, bring it up. What do you have due on Thursday? You got, I think, chapter 3 smart book,
And the Connect chapter 2.
and your
Connect chapter 2.
I thought I moved chapter. So on Thursday, I show that you've got chapter 3 smart book and chapter 1 Excel homework. Remember, I revised the syllabus because of me being absent. So your chapter 2 Connect homework is due on the 15th. So make sure you get the revised syllabus that's uploaded. Or check in the assignments button and it'll show the new due dates. Okay?
So wait, we don't have anything due Thursday then?
Yes, you've got chapter 3 smart book and chapter 1 Excel homework.
The smart book on Blackboard says it's due the 15th for chapter 3. I'm looking at it like.
Oh, well, do it for Tuesday. I know why, because I know why. It's going to be due. It's due Thursday, the 10th.
It's not due the 15th.
Yeah, thank you for letting me know that. Yeah, so do it for Thursday. I'll go. Thank you for letting me know that. It's. I need you to do smart book before we start chapter 3. Okay.
Are
So
we
it's
submitting
just smart book then?
I'm sorry, AJ. Do what?
Are we submitting the Excel stuff?
No, you'll submit it on Thursday. So save
Okay.
it so we can finish it on Thursday.
Okay, I was just making sure because it was due today. Yep, just
Yeah, it
checking.
does say it's due today. I'm gonna change that also because I was hoping to get it done today. We only needed about 5 more minutes, but we'll finish it on Tuesday. And then y'all will upload it on Tuesday. So I can give you some feedback on your work. All righty?
Wait, one last question.
Sure.
Wait, so it's just the smart book, not the Connect homework due Thursday?
And your chapter 1 Excel homework.
Okay, so it's Excel and then it's the smart book, right?
Smart book for chapter 3.
Okay.
All righty?
Okay. Thank you.
You're quite welcome. And I will see y'all on Thursday, and I'm so happy to be back. And I think we're all good. If you have any questions and need to meet with me, you know, I've got office hours. Michael, I will be at office hours from now on. Sorry about yesterday. So peace out. See y'all on Thursday or on office hours.
Bye. Thank you.
Bye-bye. And I'll get these videos uploaded.